Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, July 14th, and then we'll see how things look for Tuesday, July 15th. Recapping what happened on Monday, it was a relatively quiet day in the markets, but resilience was the name of the game. The S&P 500 closed up 0.14%, a modest gain after a choppy session. Prices opened lower after gapping down in the futures market Sunday evening, but quickly recovered after the open, oscillating between the daily pivot at 62.56 and S1 at 62.42. By the close, the index had reached 62.70 before settling slightly below that level, reflecting a lack of strong conviction but a steady upward bias. Market sentiment remains extremely positive, ticking up to 76 from 75, signaling exuberance among investors. However, we're seeing early signs of momentum slowing, with short-term indicators including the StochRSI and CCI charts showing some weakness. Despite this, the market is holding above key moving averages across the short, intermediate, and long-term timeframes, maintaining a bullish trend. Notably, the market shrugged off trade and tariff news that emerged over the weekend. Proposed 30% tariffs on the EU and Mexico, potentially starting August 1st, and President Trump's announcement of up to 100% tariffs on Russia by September 1st if no ceasefire is reached with Ukraine. This failed to spark any significant selling. Investors seem to view these as negotiating tactics, with a wait-and-see approach prevailing. Positive developments, such as the EU and Mexico expressing a willingness to negotiate trade deals before August 1st, helped stabilize sentiment. Sector performance was mixed but encouraging for growth. The Nasdaq and Nasdaq 100 hit new all-time highs yet again, driven by strength in growth stocks. Financials and discretionary outperformed while energy lagged. Mega-cap stocks held steady but didn't lead the charge. Volume remained below average, which is typical ahead of major market catalysts. There were no major economic reports released on Monday, but the market's focus was clearly on what's coming next. Looking ahead to Tuesday, July 15th, the Consumer Price Index, or CPI, is set to be released, and as the second most significant economic report of the month, it could set the tone for market sentiment and expectations around interest rates. Investors will be closely watching to see if inflation aligns with the Fed's target number under 2%, especially after Truflation's recent reading is coming in at 1.71%, but the previous reading for CPI came in at 2.4%. Adding to the excitement, earnings season is kicking off and into high gear. Before the market opens, there'll be major banks reporting, including Wells Fargo and JP Morgan Chase. These reports could significantly influence the financial sector, which has shown signs of strength but recently dipped below its 200-day moving average relative to the S&P 500. Positive earnings could spark a rebound, while disappointing results might pressure the sector. Also, the Empire State Manufacturing Index will be released, offering further insight into economic activity. Geopolitical developments, particularly around tariffs and trade negotiations, remain in the background, but are unlikely to drive major moves unless there's a significant escalation, either positive or negative. From a technical perspective, the market remains bullish across all time frames, but it's showing signs of fatigue. Momentum indicators are rolling over in the intermediate term, and sentiment, while still extreme, has been camped at elevated levels for over a week. However, a disappointing CPI or earnings report could push prices towards support levels, so stay vigilant. Seasonality is also worth noting. The first half of July has been positive for the markets, but historical data suggests the second half often sees slower gains. With options expiration looming on Friday, we could see increased volatility. Historically, the S&P 500 is up 57% of the time during July's options expiration week, going back to 1980. In conclusion, the CPI report will be critical. Will it signal cooling inflation, or could it surprise to the upside and pressure stocks? Bank earnings will set the tone for the financial sector, and any surprises could ripple across the broader market. Keep an eye on the S&P 500's pivot points for Tuesday's session, as these levels help guide intraday moves. I hope you found this podcast helpful. For more in-depth analysis and commentary, The full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.